Welcome to the Traders Market Intelligence Report brought to you by WealthBuildersHQ.com. This update is from Monday, April 7th, 2025. What a day it was. Usually I start off with hope you have a great day. Hope it has been a great trading day for you. And if you know how to trade the downside, today was an amazing trading day. But I know most individuals are investors, not traders, and they're sitting back watching the market plummet along with their 401ks, right? It has been an amazing move the last little bit. So as we get started, keep in mind that everything we look at is for education. Nothing's meant to be advice or recommendations. If you find something you like, anything, make sure it fits your own personal risk profile and risk tolerance. All right, so we're going to start off with some economic reports, and this is what we got coming up next week. Is all red. Let me make sure we got orange checked off there. We do. We got them there. Just U.S. So everything is red. FOMC. So we got nothing Monday, nothing Tuesday. FOMC on Wednesday. 2 o'clock, which means you're going to have light volume, LV, light volume all day long until that announcement comes out of the minutes on at 2 o'clock. 8:30 on Thursday, we got a couple of reports. They're all pre-market, right? So if you're trading futures, it will have an effect on what's going on right then and there. The market's going to react when it opens up to the news already. Same thing on Friday. You got two more reports that are at 8:30. This is pre-market. And then at 10 o'clock, you've got some consumer sentiment and inflation reports. Those are going to affect the trade. So if you're in a trade at 10 o'clock, that could potentially have an effect on your trade based on what that news comes out to be. Okay? So now I want to go ahead and look at the markets. Oh my God, we just fell apart. Look at the destruction, not only of this market, but of almost every market, right? Look at the destruction that we've gone through. We're going to look at some others in a minute. But there's a key here, right? If you just go with a basic premise, just a very simple FTF, right? FTF, period, right? Follow the fibs. Follow the fibs. Guys, I want you to pay very close attention to what has just happened in the last 3 days alone. Let's go 5 days. Let's go to last week. We ran down, tapped into the zero line and bounced. We had gap down on Monday, ran into the zero line, and we bounced. Okay? Tuesday, we ran up, hit a high of a wick on our 236, our hesitation point, and we closed right about the hesitation point on Wednesday. We gapped down and opened near the zero. We definitely had an extra obstacle in the way with this 54.73, which is a midpoint of Fibonacci lines, and we closed right by the negative 136. Now, but Rob, it didn't close exactly on it. So what? What closes exactly at support? What closes exactly at resistance? Nothing. It's rare, right? You're looking for zones. We gapped down today. Yeah, we're kind of in the middle of these two fib lines. I get it. But folks, we ran all the way down to this negative 618. Actually, right before, if we look at a 5-minute chart, the 618 is this line right here. You can see that just 10 minutes prior, right? This right here is the 1550 candle. If you look down at the bottom where my mouse is shaking around now, right? It's, you know, let me get a crosshair on. So right there, you see the line goes straight down. That's the 1550 candle. We were just near there, and we closed below it. Not by much, but we closed below it in the last 10 minutes of the day, right? So really not something that has been a problem that we've been there all day. We pushed into the very end of the day, right? We were closer to that 5107, just as I said, a few minutes before we came to do the recording. But overall, look at it, folks. These fib lines have been extremely accurate, extremely important. You know, we went fib line to fib line today. We broke down, and how did we play off of that 52.59 level? Let's see. Let's look at a 5-minute chart today, 52.59. By the way, right there, 52.59. We broke down, we closed, retested, we failed. Ding, 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 winner, winner, chicken dinner, right? This is exactly the pattern we're looking for. This is the stuff that I talk about every single time when it comes to utilizing the proper entry technique which is right here. It's and I'm known for saying it's all about the E for entry, right? You've got to get the right entry in there. Now, did we have a big run where we bounced back up? Absolutely. I'm not saying you should have held, you should not have held. I'm not pointing that out at all, right? All I'm saying is not only did we, let's go back to the daily chart. Not only did we open near the fib, when we broke it, we retested and failed. So it gave us a perfect setup, and every other stock you were looking at today should have been something that you were considering as the market was failing off this 52.59. What's my stock doing too? Right? And if we look, I'm not going to bring the charts up on all of them, but I wanted to show you, don't worry about what's in these first couple of columns here to the right. Right? This is just, put in a number and it'll just give you what the pullbacks are. Okay? What the dollar amounts are, the pullback level, based on this. But the S&P 500, we're down 17.46%. That's our pullback from the 52-week high. The NASDAQ, we're down 22.13. The Russell, we're down 22.54. On the Dow, we're down 10. Right? Let's make sure I did not make a mistake on that one. Let's go, DJIA. I'm off a little bit. My high was not here. It's probably in here. So my high on this one is 45.071.29. Not by much. 41.071.29. We're still at 10%. So we've had the smallest pullback in the majors, in the blue chip stocks, where the NASDAQ, which was the biggest runner, the biggest winner for the year prior to this, well, not just the tariffs, but prior to the pullbacks we've had recently. And the rut, of course, has been smashed. It's been almost impossible to get a decent iron condor out of it where you're holding overnight at all. But right now, we're down 17.5%. We need, so this is where the far right comes in handy. 10% is considered to be a pullback. 20% is considered to be a correction. 49.17 is a correction. We're not that far off. If we're sitting right now with a current low, we're sitting the low, which is today, was 50.74, right? We're talking about 49.17, 125, 140 points difference. We're down 200 and change today, right? So definitely doable. And if we look at the VIX, fear's here. Baby, fear is shooting up, baby. That sucker is getting up there high. We're at 45 on our VIX today. So we did have this very strong stretch up here in August. Okay? All the way up, we pulled up in there, right? Prior to that, we got to go, let's see. We got to come back, I don't know. No, it's above this blue line. So we got to come back here to 2020, April of 2020 to have gotten to those levels. That's how long it's been. My red zone doesn't even exist that far back, right? That's how long it's been since we've been to that zone. So on the S&P 500, do we have some targets then? We do. Let's do this first. Let's unscrunch. Let's open this up a little bit. Now let's scrunch it down this way. So we're looking at the 5,000 as the first place, and then we're going to snap a line in at 49.18. 49.18 gives us a 20% pullback. I don't care where I put it right now. Put it in there and I'll change it. 49.18. Right? So this would be a 20% correction. I don't know why there's no arrow there. Let's try that again. 20% correction. All right, would be that 49.18 level. So we've got a little bit of way to go, but there's nothing stopping us, baby. We chipped away the ice today. Yeah, we got a 5,000 level. There'll be some hesitation there. But one more day of fear like we're having now, and we may hit it. Now, there are some interesting things happening in the market, right? And with companies, big companies, Ford. has just come out and said, yeah, we're not raising prices like all the other car manufacturers. We're going to drop our prices, and we're going to give every customer, every consumer now gets to buy, I don't know for how long, but now gets to buy the car at dealer cost. My truck that I own, I bought at dealer cost, right? I knew somebody in the industry. They helped me out. Basically, you can get your vehicle, if they're following that plan, it's $100. I don't know what it is today, but it's $100 above dealer cost, right? It was one of the plans that they had in place at one time. But they're giving employee pricing to everybody, every consumer. So they're lowering prices in the hopes of getting more business, where others are going to have to raise their prices because they're going to absorb some of those tariffs, where much of the U.S. Cars are made here. But that doesn't mean anything. If there are parts in there that are made elsewhere, there may be still some tariffs based on that. But we've got an overall vision of where we're looking at. From the bounce to the upside, I would not be surprised if we did get a bounce, if news got good. All it's going to take is 2 or 3 countries to scream uncle. Sorry, we're going to drop our tariffs. That's all it's going to take for this thing to start to turn around. And if it does, we're looking at that 52.59 as the next upside target, right? The 0.382. So it's been a longer video. I realize that. Sorry about the length. I like to try to keep it a little bit shorter, but I really do think there was a lot of value bombs in there today of what we're looking at. So with that, have a great rest of your day. I will see you all at our next update. Bye for now.